Hello students and traders, good morning. It's another interesting session of the All Round Analyst with Fx-Kalapanzy, and this morning we're going to be looking at the Euro-US dollar. Remember that we looked at this currency pair a couple of days back, sometime last week, and told ourselves that this pair was ready for a huge down move. Now we still confirm that perspective and show us reasons why that perspective is still holding sway. Alright, so start very quickly, starting off from the daily. We can see that the market had this big down move. Okay, the market had this big down move to the downside. Got some support here, entering into this other block down here, and has gone all the way up. Now we expected this up move to take us back to this other block here, and after this touch of this other block, we expect the market to go down, back, taking out all of these levels and going below this level down here. Okay, now why do we expect that? Because we know how the market moves, that the market moves from point to point, from support to resistance and resistance to support. Okay, so very quickly let us see why we had that perspective. Now we had this down move here that took our liquidity below this point by this down move. Liquidity below this point, and it's only expected that after a break of structure to the downside, we expect the market to U-turn and come back to that other block that brought about the break of structure. And this happened sometime April 2018. I expect that the market will come back eventually all the way back into this other block, and the market did come all the way down to the other blocks just as we expected it to do. But it took quite a while. The market never moves at once, it takes its time. It came down to this other block here, and from there found its way up into our other block of interest. Okay, so the market having gotten to that level, what do we now expect? We expected a U-turn, which is a reversal, and the market gave us just a reversal at this point. We see the reversal plays out nicely at this point, giving us this high and this down move. Now, what do we see on the daily? We see that the market came with this down move, taking out this structure at this level. So we have a break of structure here, and we expect the market to pull back again into that other block that brought the break of structure. And the market did that by tapping into it nicely, went all the way down, came back again to test that level by giving us some grab of liquidity above these highs. Remember, it's only natural when the market makes a high. Traders, retail traders especially, would want to put their stop loss just above that high and trade bearish. Now the market has come back to take out that level, grab liquidity that lay above this high, so all the stop loss, all that above here, the market has grabbed before a down push, and that's where we are right now. Expect the market to continue all the way downwards till it gets to our target below all of these levels. Okay, now this is on the daily, so we would like to go into a smaller time frame and see how this plays out. Okay, so now our interest is here. Going to push this a little bit away and ask ourselves, the current candle of interest is here, right? Because that was the up move, the last up move before the down move, and here we have it, and that is for the daily. And we can see the market has tapped into it very beautifully here. We know that has been fulfilled, so we know it's not rocket science, it's not guesswork, it's actually a systematic process. Now, the market having tapped into this, we expect the market to now continue all the way bearish, take out this level, find some reversal here, slight pullback, and then a drop to the downside to give us a continued bearish move. Remember, from the monthly we are bearish, on the weekly we are bearish, on the daily we can only expect to trade bearish. Why? Because remember, we are trading the direction of the larger time frame. That is always the perspective. Trade in the direction of the larger time frame. Okay, and that having been settled, I'll go very quickly to the 4-hour, so we see how this has progressed. Okay, see how this goes. Okay, we'll make this real quick. We see this up move and ended somewhere here, and then came the reversal, taking out structure at this level. Then we had a pullback back to the other block that brought the down move, and the market has continued going bearish. Now I expect this to continue all the way down, and perspective is obviously very bearish. I like to keep this as short as simple. My advice is that you look for bearish trades, take bearish trades, and avoid trying to trade the pullbacks bullish, because you never can tell how the market will react. But higher time frame bias is bearish, long-term perspective is bearish, and it's only safe to trade bearish. Alright, I'm going to leave it at that. On this note, wishing you a beautiful day. Remember to like, comment, and subscribe if you like. If you don't like anything you're not comfortable with, please remember to leave a comment, and we'll be sure to make it better by every passing day. Every day, hoping traders find a way. This is Fx-Kalapanzy, and I'm out.